All right, we're live. So welcome back to Dapp University. So today we're going to talk about something that is really big for all of crypto, Web 3.0, the Metaverse. All right, we're going to look at a lot of other news updates that have happened in this space since yesterday. Again, we do these live streams Monday through Friday on this channel about just turn notifications, subscribe. You'll find out about those whenever we go live. We're going to answer some of your questions, check out some of the crypto markets, and a lot more. So if you're new around here, hey, I'm Gregory, and on this channel I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to learn how to master blockchain step by step, start to finish, then head on over to dappuniversity.com/bootcamp to get started today. Last but not least, like nothing I'm saying in this video does not be financial advice, and there's lots of scammers down in the comment section below. Just ignore them, like I'm never going to give you my phone number on YouTube or ask you to invest with me. That's absolutely crazy. So we got people jumping in the chat here. We got David Stone, we got Camille, we got Diego. Awesome, welcome. So let's go ahead and jump into this. Let's talk about something that's big for all of Web 3.0 and also the Metaverse, okay? Because this is a trend that is growing and that we need to pay attention to. I'll talk about the impact this has on the overall space and also the current moment, because a lot of people are, staring at the crypto market saying like, hey, what happened with this recent price correction? Maybe you're just kind of confused. So I'm gonna talk about that here in a minute, and why, what we're looking at today is relevant to that particular topic as well. So I want to pull up a story on my screen here that came out yesterday. So this is sportswear giant Nike purchases NFT fashion and collectible startup RTFKT. I don't even know if I'm saying this right. Okay, maybe you could say this out one way. I see this in print all the time, but haven't heard anybody actually say it. So I'm just gonna say out the acronym letter by letter here. I assume it's an acronym. So Nike is making a major move into the Metaverse with the acquisition of leading digital apparel player. Okay, so let's look at some more details here. On Friday, NFT collectibles and fashion startup announced on Twitter that the company had been acquired by Nike. The terms of the deal were not disclosed. Okay, the acquisition appears to be a perfect fit. One of their flagship products is a hybrid NFT physical shoe collectible inspired by the legendary CryptoPunks NFT collection. And their project attracted headlines in March when a digital footwear collaboration, okay, et cetera. So Nike was exploring the technology as early as 2019 with looking at a patent for tokenized shoes. But basically, we have a situation where somebody had built something really useful independently, and Nike decided the best move was basically to just buy them. So Metaverse fashion is a rapidly expanding sector. A rival NFT streetwear project, Crypto Kickers, signed a first ever digital shoe deal with former National Basketball Association star Wilson Chandler in April. Okay, so what are some things that we can draw from this here? And let's see here. Let me know if y'all can still see my stream okay. Inside my live streaming software, it looks like it's pinwheeling. Can y'all still hear me okay? And see my screen? Like you can see my hand and face moving. Somebody says yes, all good. Okay, awesome. I'll take your word for it. My live streaming software looks like it's just totally frozen. But as long as you all can see. Okay, awesome. So let's talk about why this is such a big deal, okay? Because at first glance, like some people look at this might say, like, who really cares about, digital sneakers, right? There's a lot of skepticism about the Metaverse and what it's going to mean, for the future, like what's going to work, what's not going to work. Are people really actually going to buy like digital shoes? Are people going to buy like houses in a Metaverse or cars in a Metaverse? And is that going to be like a real flex that they desire, instead of these other things in the physical world, right? There's lots of skepticism about this. Some people are super bullish on it. So let's kind of break it down. So first of all, the biggest things to take away from this are that people are taking this trend very, very, very seriously, like massive brands. Okay, so we talked about, Square. Well, first of all, Facebook, rebranding its entire company to Meta to focus on the Metaverse. That's no small deal in and of itself, okay? Talk about Square and its suite of companies' products pivoting to the blockchain actually being a key part in that was part of the announcement. They listed lots of other things as well, but blockchain being an influence for that, okay? And they even had, allusions to Meta, the company, so it's clearly an answer to what they're doing. And we're just seeing more and more big brands look to this, right? We're seeing more big brands on Twitter with, .eth handles and like NFT profile pictures, like White Castle, like all these, Pepsi, all these crazy random brands, right? They're doing this type of thing. So this is an indication of a huge trend, okay? So the trend, honestly, is what's the most important thing. So each individual, what each individual company and brand is doing is not so much as important as the bigger picture of where the space is headed. Because, like I said before, lots of people look at this with skepticism and say, like, hey, who really cares about like digital shoes on a blockchain? Well, we don't know what's going to work, right? It might work. It might be something where there's lots of people who care about it and you might not, okay? But that doesn't mean that the use case isn't valid and that it won't be sticky long term. So, the whole point is we don't know what's going to work. Lots of stuff's going to get tried. Lots of stuff's going to fail. Some stuff will stick, and a very, very small percentage of everything that's tried will be truly game-changing, okay? But I believe that there will be some of those things that will be game-changing, that will be complete paradigm shifts in how we conduct ourselves on a day-to-day basis. And that's just kind of true of lots of different technological innovation. That was true in the early days of the internet. There's some stuff that was tried with the early internet that didn't work, but it's not always because it was wrong. Sometimes it's just early, right? And there's certain things that aren't, certain circumstances that aren't just there for that technology to really take off and flourish. So that is what I see as potentially the case here with the current trend that we're on. So how's that relevant to what's happening in crypto right now? Because, we talked about this yesterday, but there's lots of people who are, looking at the charts in crypto and are kind of freaking out saying like, hey, what is going on right now? Prices have corrected and dropped significantly. We're going to go into a multi-year bear market or some sort of longer bear market, all that type of stuff. So I talked about this, a lot yesterday in the live stream, but the short answer is no. I really don't think we're going into some sort of extended bear market. That's just my view. Okay. So, I think about that in terms of probability. I think it's just unlikely that's going to happen. I think why is that? So I talked about it a lot in the video, but basically the short answer is just adoption. And what we're seeing here is no shortage of major brands making a big bet on this space over the future and building around this tech, okay? And more adoption of that tech, in my opinion, leads to higher crypto prices based upon basically the network effect of those crypto networks and that value accruing to the cryptocurrencies themselves, particularly in an exponential way over time. Okay, and if you zoom out, we're still doing pretty well, still on a pretty big uptrend over the past year. And that's just kind of how crypto tends to go. It tends to, track ahead of the trend and then track behind the trend. It's just volatile. And I think Web 3.0 Metaverse is a big part of this driving force for adoption. And the story that we're looking at today is a good example of that. Somebody says, how complex or profitable is it to learn to program smart contracts? Well, one of the reasons that it's profitable is because it is complex. So basically, it's insanely profitable to learn to code smart contracts if you can get good at it. That's one of the things I try to teach you on this channel. So you don't have to be an experienced programmer to learn it. You're not going to learn it overnight, but the best way to do it is to learn by doing. And the easiest way to get started is to go to my YouTube homepage and find those free courses there. Start with, learning Solidity, learning blockchain, and then learning everything else as you go. So speaking of crypto markets, I want to pull this tweet here, tweet thread. This was a take on the markets from Raoul Paul, which is saying a lot of similar types of things that I was saying. So talk about him a lot on this channel. He's got a lot of good perspectives on the crypto market. Somebody who's got a mature background outside of just crypto, but is not a noob in crypto either. Had a lot of great things to say, and I want to just pull up his perspective. So he's saying, while everyone's cutting super bearish on everything in digital assets, I do think he's saying crimped excess disposable income due to inflation is partly to blame. So basically, if prices have risen for retail investors or like normal people like you and me, then you have less money to spend on crypto because you're spending more money on other stuff because prices are higher and you probably haven't gotten a raise. So the marginal retail buyer is more marginal. So year-over-year rate of change on Fed balance sheet is also a factor, but in past cycles, risk on continued in the main. So, but a lot is position squaring, rebalancing after a good year of owning risks, tax selling too. My view is that the game hasn't changed yet. It hasn't yet changed, and that's my view. Basically, nothing about the fundamentals of this space has changed or really slowed down, and for that reason, I don't see a real rational reason for crypto to slow down either. So many are scared about past cycles on this point, and the halving cycle produced the top. But past damages to your psyche can also cause you to be excessively cautious in what appears to be an elongated cycle or change of structure. Now, it's interesting he's talking about that because that's what I've been talking about on this channel is basically what's the possibility what is the possibilities for crypto markets going forward? I think the bear market's highly unlikely, like what he's saying here. But beyond that, my core thesis is that we're creating technology that has a ton of value to it, and that value generates demand, and that demand can accrue to the crypto assets itself, okay? And that's not slowing down anytime soon. So my base case is a change of structure like he's talking about, like a super cycle. And, if that doesn't happen, then it could be, then the reason, in my opinion, that would either change is that the adoption slows or basically the market becomes over exuberant and basically creates a parabolic blow off top, which ends up creating a bear market. So, but he's saying, it kind of in line with what I'm saying is if that happens, that's likely to be an extended cycle, which would stand to reason because we're not getting it right now. This is what most people think that we're supposed to be having a peak is in December because of some, mysterious Bitcoin halving deterministic schedule. And I mean, the Bitcoin halving is deterministic, right? But what I'm saying is that the Bitcoin halving somehow, determines when the entire crypto market cycle, how it functions. I just don't think there's enough. I don't think that's how it works. I mean, maybe it changes some aspects of Bitcoin's economics to how their cycles, it influences the cycles, but this massive deterministic 4-year pattern that just magically repeats over and over again in a hyper predictable way, I just don't think that's how markets work. So we haven't seen a blow off top with record participation. We have seen speculation of some size in NFTs, but that is mainly people who already have ETH and have profits to burn. Funds will be allocating fresh P&L and new mandates in Q1, and if that drives prices sharply higher, it will bring record new wallets, etc., and long-term holders will begin to put coins on exchanges to top slice. So what he's saying is basically institutional participation of cryptocurrency is likely to be high in like January, February, March of 2022. So that's huge because institutions can buy cryptocurrency in a much bigger way, than retail investors can. I mean, think like $1 billion. If you want to buy $1 billion of cryptocurrency, well, you'd have to know a lot of really rich people to pull that together from individual investors, right? So, but an institution can buy $1 billion of cryptocurrency. One institution. I mean, Tesla bought $1.5 billion of Bitcoin for its balance sheet earlier this year, okay? So that's what can happen. So remember, digital assets overall have gone nowhere since May unless you were lucky to nail a pump. But the rally from July low has seen most digital assets well below their highs, but meaningful institutional adoption is underway with exponential new use cases. Plus all this stuff with, Web 3.0 artists, et cetera, et cetera, et cetera. Anyways, I won't go through the entire thread. I'll put it in the live chat replay. But I think it's a really good take, and it echoes a lot of my own thoughts. But of course, he has a much better perspective on the macro side of things than I do. I just have enough experience just watching the crypto markets and understanding fundamentally how the space works. And that's really what I try to do on this channel, try to pretend to be a guru of crypto prices or technical analysis or anything like that. But just try to tell you my perspective from being in the space for a very long time. Do I need to buy an Oculus? That's a good question. I'm assuming if they want to try to participate in the Metaverse, I guess if you have a Christmas wish list, maybe you could get an Oculus. So, speaking of Web3, one of the benefits of Web3 is censorship resistance, okay? Basically, and actual ownership. Then they can kind of go hand in hand. So basically, the whole thing with blockchain is that everything's out there in the open. It's immutable. It can't change. And when you own something, there's no way that somebody can just take your assets from you without basically hacking you, right? No centralized middleman can take your stuff away from you. And we're seeing this type of thing and how that's not the case in Web 2.0, because don't forget, with Web 2.0, we have so much centralized control that if somebody wants to take something that you quote unquote own in Web 2.0, that they can just change a record in a database that they have full control over, and then your ownership is completely gone. So we saw this story come out yesterday. Assuming that everything about this is true, just taking it at face value. So basically, the person who owned the Instagram handle Metaverse basically woke up one day and did not have it anymore. Somebody said Facebook isn't going to buy it, they're going to take it. And apparently that's what happened. So again, I haven't checked everything about this story, but assuming that it's true and assuming it's just taking it at face value, I thought it was a pretty good commentary here. So in Web 2, you're just borrowing things, okay, until the actual owners change their mind. So with Web 3.0, for example, let's take something else where you might have a social handle. So the .eth names, right? So if you own a .eth handle on blockchain, with smart contracts, there's no way anybody can just take that from you unless somebody hacks your account, okay? Or you do something basically, I'm just going to say that, hacks your account, whether they take control of your wallet or they spoof something on a site and you sign a message that you're not supposed to. So whole point is the smart contract creators can't really just take it unless they have an upgradable smart contract, of course. But just in principle, a smart contract is that. It's a contract that can't change, okay? I realize that there are smart contracts that can change, but just from a very, basic principle, the smart contract can't change. And so part of it is when you buy a digital handle like that, it's a contract that you are now the person that owns this and you have the rights to this name. You're identified this way in the blockchain, and we're not just gonna take it back. We can't take it back. And then I think I saw another take. I think it was also from Chris talking about can't do evil is better than don't do evil. Basically designing systems where people can't be evil is better than systems where, you have to trust that people won't do evil. Now, not that I'm saying that taking somebody else's social handle is on the same level as evil. I don't think that's evil. I think it's bad. But, So what are your thoughts that a quantum computer will be able to crack cryptography of Bitcoin when it will reach 1,000 qubits? So that's a good question. I just don't think that we have the quantum computing power to anytime soon to really threaten the integrity of Bitcoin's cryptography or other major blockchains for that matter. I'm not a quantum expert, okay? But my read on the space is that's the current state of things. Now, that being said, that's quantum computing that is available to regular people. Now, you don't know if there's some very sophisticated groups that have these types of quantum computers that could crack Bitcoin, okay? But if you did, like, you would also be able to access every single, like, you'd have the cryptography to crack every single password on the internet. Imagine what you could do with that power. You might be able to have the power to crack nuclear codes. You know what I mean? So if you had that kind of power, you're probably not just going to take down the Bitcoin blockchain, because if you do, you're just going to show your cards and show everybody, hey, I've got this. It's not what you're going to do with it, okay? So that's my take on it. The other side of that is, let's say that technology does become available, that basically commercially available quantum computers, maybe not even commercially available. Let's just say it's available enough for enough dangerous, nefarious, ne'er-do-wells to crack everybody's Bitcoin wallets. Let's say that becomes that available. Then, we can use that technology to create quantum resistant, or basically quantum cryptography, to encrypt the blockchain. Again, I'm not a quantum expert, but that's just my read on the space. Okay, so another thing that I saw come out yesterday, which is pretty big for, the blockchain space, is what's happening with Optimism. So Optimism is removing its whitelist. All right. So what is that? Why is it important? So Optimism is a layer 2 scaling solution, okay? So basically, people talk about Ethereum being too slow, too expensive to use, that, hey, nobody's ever going to use this because of the current state of the blockchain, and they think that Ethereum 2.0 has to get here in order to fix that problem. Well, you're right. Ethereum is too slow, too expensive for most people to use, but there's still a ton of demand for Ethereum, so you have to keep that into account. But the long-term solution is to move towards layer 2 scaling solutions, because Ethereum 2.0 is not going to fix that problem in and of itself. We have lots of layer 2 scaling solutions that are gaining lots of adoption. Of course, you see the TVL tank over the past several days here. But a lot of the TVL is literally just a function of the cryptocurrency prices, because as the ETH price goes down, the TVL goes down. And ETH price has gone down by 15, 20% over the past couple weeks. So anyways, there are lots of layer 2 scaling solutions out there. There's optimistic rollups. This is one of the main categories. Optimism is an example of that. There's Arbitrum in that category. There's also zero knowledge based solutions. But anyways, we have all these solutions that are, pushing forward and advancing. And Optimism launched earlier this year. It was a really promising solution, still is. And they started with a whitelist, basically saying, hey, we're going to start off with, I don't say a sandbox environment, because it's more, it's not that, but basically launched the production environment with some guardrails on it, basically. And part of that's whitelisting who could participate. But now that whitelist is being removed, okay? So this is a big deal, because that means we're opening up the floodgates for developers to move their applications over to layer 2s. And so I do think the layer 2 is going to be big in 2022. It's taken a long time to get to this point. And, I kind of thought we would have pretty wide layer 2 adoption in 2021. I mean, we have adoption. I would not call it wide at this point, but part of that's just a nature of getting over the hump with this type of thing. But I do think 2020, I do think we're reaching this inflection point where 2022 can be a big year. Okay. And what are the next missing steps towards getting to that point, in my opinion? Well, it's ease of ease of getting onto layer twos in a cost-effective way. So I do think we need more centralized exchanges, letting users withdraw funds to layer two environments, like their tokens and their ETH, like onto Optimism, Arbitrum, ZK Sync and others, right? So, and with just more developers move their applications over there so we can get those network effects. I do think as we see these whitelists removed, as more, as more of these environments become, rich ecosystems, that there'll be more incentives in play for basically people to start using the applications on those, more tokens traded, more liquidity mining incentives, all that type of stuff, airdrops. So can you go over the modular blockchain model? Is that solution better than layer twos? That's basically part of the modular blockchain model. You can think about layer twos as a module in the modular design. Roadmap to become a developer. So yeah, I go to my YouTube homepage, find the pinned video there, how to become a blockchain developer in 2021. The video is still highly relevant, but I do plan on updating that video for 2022 very soon. So make sure you subscribe, turn on notifications. You'll find out about the video whenever it comes out. So it says, will layer two adoption negatively impact layer one investments? Well, it's not financial advice, but if I have to read into that question, it sounds like you're saying, will they be competitive with alternative layer ones like Avalanche, et cetera, et cetera? I think Ethereum layer twos are basically direct competitors with things like Avalanche and others, particularly around EVM compatible layer ones. So you can do with that information what you will. Any other skill you would pair with development to be successful in Web 3.0 market? Yeah, I would say the ability to do sales and marketing is a pretty good skill, no matter what your primary skill is, because at the end of the day, you can always increase your employability with some basic personal marketing. So question, can you explain how an asset from one chain, let's say Ethereum, gets transferred to another chain by a smart chain? Does the asset retain its properties like USDC and ERC20? So in many cases, all right, you're using a bridge that basically talks to each blockchain and facilitates the transfer from one blockchain to another. So what a really common implementation is that you basically have smart contracts on each blockchain that receives the funds and then moves it out on the other side, and then you have this basically centralized computer in the middle that kind of centralized network of computers, depends on the implementation, right? That's basically saying, okay, we received money into this smart contract, or this wallet, whatever it is, on one blockchain, and now it's safe to move the money to this address on this one. That's how a lot of bridges work. So I don't have a lot of faith in many of the bridges now, because they are, somewhat centralized in this way. I should take that back. Maybe that's not, because I don't want to FUD the bridges, but I'm not saying that they can't be better long term over time. I just personally, if you're talking about sizable amount of money, would be cautious when using a bridge. Put it that way, all right. And hopefully, most bridges now would be honest about what the trade-offs that they are making, and tell you to exercise caution. I think a lot of bridges that are worth, their weight would disclose those types of things. Okay. So that's how most bridges work. Maybe not most, but that's how, I don't know how every single bridge works, but that's a common implementation for bridges. Okay, so the last thing for today is, we got a lot of big stuff happening in 2022. I'm not betting on the crypto space slowing down anytime soon. We plan to do a lot more at Dapp University in 2022, and for that reason, we need to grow the team. Okay, so we are hiring for several roles: a blockchain developer and content creator, a research analyst and content creator, a YouTube thumbnail designer and just general graphic designer, and also a project manager. So if any of these roles you feel like that you are excited about crypto, excited about this space, have a lot of experience in these areas, then definitely check out dappuniversity.com/jobs. I'll put a link in the live chat replay right now. Okay. Our primary needs are definitely more content creators to help me on this channel. So basically a blockchain developer, content creator, basically someone who can program and do like examples on screen, not camera shy, all that type of stuff, and a research analyst and content creator who understands the space, understands how to analyze, news, understands new projects in the space, all that type of stuff. Help me co-host some of these streams. I'm not going anywhere, you know what I mean? I'll still be here, but I think having more contributors is the best thing so that we can do more in 2022. So definitely check out that link. That's all I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. That really helps these videos out so that more people can learn about blockchain. And if you're as fascinated with this technology as I am, you want to get your hands dirty, how can you get started today? Well, you can go to my YouTube homepage. You can find my free courses there. They're like Udemy courses, but they're totally free. And if you like those and you want to take the next step, or hey, maybe you want to take a master shortcut entirely, I should become a blockchain master step-by-step start to finish over at dappuniversity.com/bootcamp. You don't have to be an expert to get started today. I've helped people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. That's next time. Thanks for watching Dapp University.